Hello everyone, welcome back to this channel. Welcome to the new subscribers as well. So first of all, I hope you guys are doing well. So in this video, I want to share something from my experience that is very often spoken in the trading community. I don't want to keep any surprises. It's fair value gaps and it's related to ICT, right? So if you have been following my channel for quite some time, you already know that I don't really recommend anyone to go follow the ICT concepts. And you know that I always tell ICT is not equal to smart money concepts, right? These two are completely different. Okay, I don't want to talk about ICT because there is no point, right? I can say ICT doesn't work. It doesn't really have any value to you guys, right? Even if I say ICT works, it doesn't have any value, right? So I want to share something from my own experience after trading smart money concepts for more than 3 years, why fair value gaps absolutely suck. I don't even consider fair value gaps when I'm trading the markets. I only look at order blocks when I'm trading the markets, right? So from my experience, I have also collected tons and tons of backtested data, horse and horse spent backtesting all these things, right? I want to just guide you in a way that I think is the best way to approach smart money concepts, right? Okay. So the first thing I want you guys to look at is take this structure, right? So we call this breakout structure, we call this order block, you will call this fair value gap, I guess, and this is a rally moment towards the upside, right? Every single thing that's happening in the market, be it breakout structure, be it fair value gap, order block, we are just giving it definitions. Every single thing is liquidation, right? So keep that in mind first of all. So the thing is, if you have been following what I have been teaching about SMC concepts, I usually use only order blocks as point of interest. I never consider fair value gaps as point of interest, right? I think this is a fair value gap and or something. So the reason why this doesn't make any sense, absolutely no sense when trading, is because from my years of experience, I have only seen the market liquidate this entire point and then actually respect the structure, right? Because one of the key important topics of smart money concepts is actually market structure, right? So this entire structure, the pivotal point of this entire structure is actually present in its order block, right? So this is where the orders have been placed, and this order block was the one which resulted in a breakout structure right here, right? So let's not forget, obviously orders get placed every single point in the market, but since we are only using time frames to trade, for example, this is the 5 minutes time frame, right? This is the only way we can actually trade the markets in the right way. So if you think about this, orders get placed every single second of the market, right? But we use the time frame so that we can make some understanding out of all these orders that are happening in the market, right? So this is how we come to the conclusion that this order block is the one that resulted in this breakout structure, right? So the liquidity from this order block is the one who pushed this entire move for a breakout structure, right? So now take the same concept, apply this in the fair value gaps. I don't know how to apply that. It doesn't make any sense, absolutely no sense, right? So now people who have been into these ICT concepts might actually say that I have seen this work multiple times with my own eyes. I have seen this work again and again. If you are thinking like that, I would suppose that you are very new to trading, because I would like to tell you that every single strategy works in the market. As a SMC trader, you might see that many people don't really say this, but this is actually the most logical conclusion about trading. Every single strategy works. You just need backtested data before you apply that in the live markets. So as a SMC trader, I will tell that support and resistance works. Simple confirmation strategies work. Simple liquidity sweep strategies actually work, right? And even trendline strategies, every single strategy works. You just need to figure it out using backtested data. Even if you trade SMC or even let's say some ICT concepts, I don't know any ICT concepts, right? But I'll just say for the sake that every single strategy works in the market, right? So just don't take a simple to 50 or 100 examples and say that fair value gaps reacts to the market, because every single aspect of the market actually makes the price react a little bit, right? So I'm just telling this from my experience, because if I'm not into this business, I would never know this, right? So only after 3 years of trading using all these things, I can clearly see that fair value gap doesn't make any sense. So this is why I always tell that there are only two valid order blocks in the structure. Don't trade with multiple order blocks, because that's logical. You will get multiple stop losses, right? So this order block led to a breakout structure. And this is the simple logical reason we are using this order block to trade, right? This is not very complicated. This is the simplest way you should approach smart money concepts, right? So let's take this structure, for example. Let me move this right here. So let's take this structure, for example, right? So I think this will be taken as a fair value gap when there is an order block right here, when there's a candle right here, right? Or something like this, right? The same thing applies here once again. The market went up, consolidated a little bit, and this order block in the 5 minutes time frame led to the break of this entire structure, right? So BOS happened here, the liquidity push happened from this candle, and only then we got a break of structure, right? So this is how you can actually make sense when you're trading the markets using smart money concepts, right? Because even while you trade smart money concepts, you need some key understanding. It's like a story. It's literally like a story, right? You should build your story, only then you should take your trade. So in the same example, I don't know how the fair value gaps actually make any sense. This is just a temporary imbalance in the market. So fair value gaps are nothing but imbalances in the market. Usually, if you take enough backtested data, if you have been trading smart money concepts for enough time, you will see that the market actually doesn't respect this at all. Usually, most of the time, out of 100 times, the market will completely liquidate this entire fair value gap. It will mitigate a valid order block. Only then the market will actually come down. This is how the entire structure actually works, again and again, like a cycle, right? So guys, this is why I would like to tell that fair value gap doesn't make any sense. So also, okay, let's look at some examples in the live market as well, so that I can clearly show you guys why fair value gaps is very, very difficult to trade actually. So let's say we got a breakout structure right here. Forget about whether this is a minor trend, primary structure. Forget about all those things, right? Let's just take the fair value gaps. Okay, so in this point, which point do you take as a fair value gap? I would suppose you would take this as a fair value gap, right? So let's just mark this, and let's mark another fair value gap, I think right here. So all these are actually fair value gaps, right? So now I'll just show you guys how I actually mark order blocks in the structure, right? So what I do is I go to the bottom of a structure. I see this is a very clean order block, right? At the same time, this order block was the one who gave a break of structure in this point, or at least a sweep, right? So this is a very logical thing to do. So let's see what happened here. Okay, so if you see here, the market reacted to this order block, and then the market once again reacted to another order block right here, and then the market liquidated this entire order block, and then the market went up, right? So let me just take another order block so that we can trade the structures that are present on the right side. So this is a valid order block. Let me just mark that. And this is a valid order block. It's only mitigated a little bit, right? So, and this is also a valid order block. So let's see how the market actually reacted to all these things. Okay. So if you guys see that, the market usually doesn't really respect the fair value gaps. Okay, now if you see here, I can see that the market has kind of reacted to this fair value gap. Let's just say that the market actually mitigated this fair value gap, right? But how will you actually trade this structure? Because there are multiple fair value gaps, right? There is one here, there is plenty here, there are many here. So how will you actually trade these fair value gaps? That's my primary question to the people who actually trade using fair value gaps, right? Because there is no structure when you trade using fair value gaps. But when you trade order blocks, usually what we do is we take the fair, we place it from the 0.5, right? So this order block has already been mitigated. So delete this. And like I said, there's only 2 valid order blocks in every single structure. Let's not forget that. So we got 3 order blocks right here, right? So you can trade this any way you want. You can consider these two as one order block, or you can consider these two as one order block. You can take one entry right here, one entry right here. You can do anything in perspective of the order blocks, right? So guys, this is something that I want to share for a long time, because I know that multiple people who can afford the trading courses or can afford for trading classes actually follow ICT concepts. Like I say, guys, don't even come to SMC. Don't even follow ICT concepts, right? See, SMC is not easy. SMC is difficult. From my experience, I want to tell you guys that SMC is very, very, very difficult. If you come inside SMC, I would suggest after few years, at least 2 years, at least minimum 1 year of trading the market using a different simple strategy, only then I would recommend anyone to come into smart money concepts, because it's not easy. It's very complicated, right? So what I would actually suggest is take a simple strategy. Like I say, every strategy works. Take a simple support and resistance strategies. Take a simple liquidity sweep strategies. Take a simple trend line strategy. Whatever works, right? Whatever your character actually likes. Take a simple strategy, backtest the hell out of the strategy. Use the FX replay or trading view replay tools, backtest, and then I promise you, you will clearly be able to see the right path towards a profitable trader, right? So guys, this is what I want to share about in this video, and I hope you guys found this video helpful. If you want to comment about what I have shared in this video, you can obviously do so in the comments. And guys, I want to notify you that for my next video, I'm going to be talking about a very, very important, very useful concept regarding SMC. So if you guys have been subscribed, make sure to subscribe so that you will be notified when this video is dropped. And my friends, I will see you guys in the next video.